What's up, YouTube? It's a nice, beautiful Sunday afternoon. As you can see, we got about 3 feet of snow. And I wanted to make a video talking about how I started the journey to pursue financial independence and retirement using real estate. So if you guys like this information, you find it useful, make sure to subscribe, smash that like button. Let's get started. I'm outside my house right now. As you can see, this is our wall. You see, walls in our house, they don't make us any money. They keep us warm. They keep us out of these elements, out of the snow that you're seeing here. But ultimately, end of the day, if you have a mortgage, you are the one who's paying for it. But what makes real estate exciting that many people don't know is that you can actually put those walls to work. You can put your house to work in order to actually make you money instead of just paying money to live in it. So let me show you how I do that. This is my sauna. This is where all business and all fun happens. You have a house that you're living in right now. Let's say today, if you get it appraised, it's worth $300,000. And let's say you have a balance on this house. The mortgage that you're paying is $200,000. At $300,000, 80% of that will be $240,000. $240,000 is at 80% of the value. And you have a mortgage of $200,000, so we're going to subtract $200,000 from that, and we're left with $40,000. $40,000 is what you can get a home equity loan on. You go to the bank and you ask them for a home equity loan on your house. They do an appraisal. They figure out what that 80% is. And they see if there's any difference in the balance on your mortgage and that 80% value. So in this example, we're left at $40,000 is the equity that we're able to pull out. So what are we going to do with that money? Well, with that money, we're going to look for real estate that we can buy that actually makes us money. So if we are buying a $100,000 investment property, let's say it's going to cost us $100,000, 20% of that would be 20 grand. So we have to use $20,000 in order to purchase this, and then we're going to finance the rest. So, because we have access to $40,000, we can actually purchase 2 of these investment property. So what does that give us? Well, we can now go ahead and rent this house out and rent this house out for, let's say, we'll just use a round number of $1,500 per month. And again, your markets, all these numbers will vary. As long as the math works out, that's all what we're looking for. So $1,500 would be what? $18,000 per year. And here we're going to have $18,000. So a total of $36,000 we're going to make gross income. So let's break down this house right here. So $1,500 a month rent will give us a gross of $18,000 per year as our gross income, right? So every area will depend as far as insurance and taxes. In my area, insurance is generally around $600 to insure the property itself. So let's go over here to the mortgage calculation. Because we use the home equity loan, the $40,000 out of our own personal house, we're going to assume we got a loan on that $40,000 at 3.5% for a 15-year loan. So that comes out to $286 per month. Now, because we're calculating only one property, we're going to divide that by half for calculation purposes. So that's going to be $143 out of that $286 is going to cover the $20,000 that we used as a down payment for that property number one. So then we finance the rest, the $80,000 for this number one property. And let's assume that we financed it at 4% for a 30-year fixed term. That comes out to $572 per month. So that comes out to a total of $715 per month that's going to go towards the mortgages to cover this purchase. We're going to say roughly about $1,000 for repairs. You'll have years where you'll spend a little bit less, years where you might spend a little bit more. This is just a general idea here. And then we'll use a 5% vacancy. So that's basically from our gross income. We're going to say what's 5% of that. Basically, if we have tenants moving out, moving in, there might be a period of a few weeks where we have to clean up the place and get it ready for the next people. So that's about $900 of loss in the turnover. So this nets us, if we sum all this up and subtract it from $18,000, all this comes out to about 14 grand in expenses. So our net is going to be around $4,000. So in this calculation it was $3,920. Now because we have two of these properties, right? We have a number two property here. That's going to make us the same amount of money because the math is all the same for it. So over here I have 3920 times 2 equals to $7,840 per year. This is our net income. So that comes out to $653 per month. That might not seem like a lot, and you might wonder, well, why take out all this huge risk and maneuver all these things where, you know, we're only making $700-800 a year on it. But what you have to realize is that as time goes by, this mortgage, both of these loans, they're going to be paid off over time. And at the same time, the value of this property is going to be going up throughout the years. And you're making money on the side. So I'm going to talk about this more in my future videos on how all this makes sense and why it makes sense. But imagine instead of having only two of these properties, you, let's say, have 20 or 30 of them. So multiply that 653 times 10, $6,500 per month. If you have 20 of these properties, well, now that seems like a lot more money. But you might wonder, well, how can we achieve that when we've emptied out all the equity out of our own personal house to purchase these properties? Seems like we're stuck at two properties, right? Well, in my future videos, I'm gonna go into more information on how to keep going, how to keep building your portfolio, and how to use very little or even no money down in order to get these deals that cash flow, that give you that profits that are being paid off, that go up in value, and over time you're building wealth. You're building wealth that you can pass down to your next generation. So if you like this video, make sure you subscribe, make sure you smash that like button. Follow me on my future videos that I'm releasing. This channel is meant for anybody who wants to start out in real estate investing. I'm also using this channel as a documentation of my progress, and I'm going to be showing you a lot of the rehab work that I do, a lot of the process between purchasing a house, doing inspections on a house, how I screen tenants. So there's going to be a lot of useful information in videos to come. So be sure to watch out for those, hit that notification bell, and thank you for watching. Hopefully this was informational. Take care.